go. So basically, I call it renting your stock. If you've got 100 shares or more, a multiple of 100 on any company that's a big company, options aren't available on all of them.
Right.
And you just say, okay, I think my stock is topping out. It's been perfect in April when they called the top. Because most of those gold stocks follow gold, so they're going sideways. So you pick a price near the top and you say, hey, now my stock at $100, call is at 105. You have to pay me 105 for it, and you get the time premium, and the stock stays at 100 or lower, capture the premium.
Welcome back, passionate investors. I'm your host, George Roberts, the author of Passionate Living Through Passive Investing. And today I'm honored to welcome a true titan of the precious metals world, David Morgan, founder of the Morgan Report and one of the most respected voices in silver and gold investing, known as the Silver Guru. David has dedicated over 4 decades to analyzing global monetary trends, mining equities, and macroeconomics. He's advised governments, hedge funds, and individual investors, including many high net worth individuals, on how to protect and grow their wealth through strategic resource allocation. Through the Morgan Report, David provides in-depth research that goes far beyond metals, covering energy technology and hard asset investing, all with a focus on capital preservation and outsized returns. He's a frequent guest on CNBC, Fox Business, and international finance media, and the author of The Silver Manifesto and Second Chance: How to Make and Keep Big Money from the Coming Gold and Silver Shockwave. Now, as we record this episode, commodities are at a 50-year low with respect to the S&P 500, and the critical gold-silver ratio is topped 100. So if you're serious about protecting your portfolio in an increasingly unstable world, this is a conversation you won't want to miss. And now it's time to bring on our guest, David Morgan. Welcome to the show.
George, great to be with you. Thank you.
Well, and thanks for coming. And I love the angle of focusing on the productive asset, that is to say, the mining company, the goose that lays the golden eggs. There is always the issue of capital discipline. Some people say that these mining companies can always find a way to, no matter how high the price of the commodity goes, they can find a way to mine it at a higher price. So what sort of things are you doing to make sure that you're investing only in companies that have that sort of capital discipline to avoid throwing away your hard-earned cash?
That's a real tough one. I mean, mining is one of the toughest businesses that exists. And of course, it's one of the most important. I was a member of the Northwest Mining Association. It no longer exists. But I said that to say this very important statement. What they said, used to have it on a bumper sticker, believe it or not, if it cannot be grown, it has to be mined.
Mhm.
And people don't really get that. You know, they go down to Walmart or whatever and they just put stuff off the shelves and they never really realized how important the mining industry is to modern life. So I digress to come back. To analyze a mining company is quite difficult. And how do you know you're going to have those margins? Well, in some specific situations, you have areas of very high grade and low grade or lower grade. So on those type of situations, it's fairly easy. You can say, okay, fine, we're going to mine this low grade because our profit margin is 10% and we're going to stay there. But all of a sudden, let's say that the price of the commodities, we'll call it gold in this instant, drops by 25%. Now they don't have a margin. So they move to a different location to mine to do what's called high grading. And that higher grade per shovel full is profitable. So they'll be able to do that. But not every mine is like that. There are some that are, there's some that are not.
Mhm.
As far as the industry at large, it's pretty difficult to do what you outline. What you really want to do is figure out all cost, what's all in sustaining cost, AISC.
Right.
And once you've determined that, you want to see what your buffer is. And we talk about that in our members section. But basically, believe it or not, you want about a 2x. In other words, if silver's at $40, you want your AISC to be 20. And that's
Right.
oh my God, they're making so much money. That's really not true. It looks like it on an accounting form.
Right.
But when you have to reclaim the mine, you have, of course, taxes and other things. And then if you want to stay in business, you're going to have to either explore yourself or go out and merge and acquire another mining company. So there's a lot more to the cost because all mines end in failure. When you take out that last highly
Right.
profitable ounce of gold, you close the mine down. Now you're out of business. And of course, the majors don't ever want to be out of business, but they have to use their capital to go out and, as I said, either explore or find something worth their money, as I just outlined with Royal Gold. Said, wait a
Yeah.
minute, We got all this cash. We're in the gold business. We can do this, and we can make ourselves more profitable in the future by buying this asset. It's kind of, as most of your people probably know, present value of money. We know what the present value is now. We know what the asset in the ground is. We know it's going to take this much to build it out to our specifications, but nonetheless, our return on capital is going to be over 15% ROI. And that's fantastic, especially to mining companies. So let's go for it.
Yeah, beautiful. And I appreciate your willingness to name names with Royal Gold there. And so the next question is going to come from our community that has taken the time to help me ask some of the best questions. Todd Bailey wanted to know, well, what else do they have in the ground? Is that sort of baked in to their, I should say, the analyst estimates or the market's estimate of the company's value, or is it kind of gravy? So what other things are they going to be able to pull out?
Well, Royal's primarily a gold company, but there are others. I'm going to just switch. I'm going to answer the question, but in a slightly different way. So if we go to silver, 70% of the market metal comes by byproduct mining. So 25% of the silver market is from copper mining. 35% of the market is from lead and zinc mining. 13% of the silver market comes above ground from gold mining. So there's a very small amount, maybe 25%, that's actually silver mining. And there's only one pure silver mine in the world right now. So even if you look at a conglomerate like Pan American Silver that has mines all over the place, they're lead silver mines, they're zinc silver mines, or copper silver mines, or gold silver mines, but there's no pure silver mine. And so what happens in a base metal miner, like a copper miner, they look at silver as an also ran. They use it as an accounting mechanism, and they don't really care what the price is as long as the price of copper is profitable. So they might high grade their copper mine if the copper price falls, and whatever silver comes along with it, they just use it as a byproduct that they use at whatever the price is as an add-on. So to answer his question, it depends on what the particular mine is doing. But the idea is that silver's been kind of given the short shrift because the base metal miners, which again is 70% of the market, really don't care about the price of silver. Whereas if you look at it more like a gold mine, where it's primarily silver is the abundant metal anytime you mine for it, which it's not, but if it were like gold, then you would have more attention paid to the price of silver and you might have a higher price set just by the fact that if we don't make a profit on silver, we're not going to keep this mine open.
So here's another one from the community. Was asking about platinum prices, something that we haven't really seen a whole lot of action in the last decade. Some attribute this to the rise of electric vehicles, although I kind of say that's similar to what you're mentioning with silver and the electrical panels, where actually, truth be told, I believe the demand in automotive applications is actually continuing to increase. We have other metals like rhodium in the platinum group that have seen some more compelling price increases. So obviously your platinum group metals are not monolithic. Can you sort of break that down for us?
Yeah, I've been really high on platinum for quite some time. We've put it and featured it as something we really like in the Morgan Report well before we started this move. And I personally decided to start buying platinum because it had such a long history of being a better price level than gold up until the last several years now. But up until whatever it's been, I might have to look at a chart, 20 years or so, it didn't have a premium to gold. And it was costing so much less than gold. And one thing I learned about commodities early on, and I learned it kind of the hard way, but I did find this book kind of famous among commodity traders. And it's by a gentleman named Weiss, and it's called You Cannot Lose Trading Commodities. Well, about 99% of the people that ever get in the futures market do lose. So how do you square that book title with reality?
Right.
And the whole premise of the book was no matter what the commodity is, be it soybean oil, sugar, or gold, if you can buy that commodity under the price of production and have patience and not leverage too hard, you will make money. Well, that's the platinum story in a nutshell. Platinum cost about $1,200 the ounce, yet I could buy it for $950. And I wanted something at my age, being the metals head that I am and a sound money advocate, that I could maybe not make a killing on, but I had almost zero risk. There is no such thing in investing, but this is close. I'm buying something for 950 that cost the best platinum miners in the world 1200. Heck, I'm becoming the best platinum miner in existence on a very small scale. So I started accumulating at around 950, kept accumulating. And then in the April report, I said, I see gold has really gotten ahead of itself. I do forecast that gold has hit 3,500. It's not going to go higher than that, probably through the summer of 2025 and possibly till the end of the year. Therefore, I'm recommending what I'm doing is swapping gold for platinum or fresh money moving into platinum or silver. Both are undervalued relative to gold and undervalued in and of themselves. And couldn't have been, one of my better calls, I will admit. And from almost the time the ink dried on the electronic platform, platinum started to take off and silver started to take off. And so again, timing is everything. I don't get it right every time, but this one was pretty profitable. If you look at a list of commodities year to date, the highest return so far this year has been platinum. It's up about 50%.
Okay, yes, good. I mean, eventually it has to happen. And here's another one I think fits that bill. You have something that's essential. So it's eventually going to be depleted. And then currently, it's not being, I don't think, replenished at its rate of consumption. We're going to need more of it, uranium. What do you think about uranium?
We've been very good with uranium. We're patient. Usually I'm early, but people understand, my thinking and so we've seen some really good gains in two of our uranium companies, and one is also a
Mhm.
uranium slash rare earth elements company. And I want to say it's the only one in the United States. That's really not true. It's one of the very few in the United
Hmm.
States, but it's closer to production than the other one. And this is kind of as you asked me in a previous question, well, what else is available there? Well, it's uranium and rare earth elements. So it's a sweetener and it's doing very well. We did an update for our members just a few days ago, and I'm going to write about in the next published report. But this is something that I just believed in the management so much. So I'd meet them at the investment conferences, sit down, take an hour, go through everything. And these guys know what they're doing. They're not wasting money, not diluting their shareholders. I really like this company. And it just sat there. But patience paid off. Like I said, you can't lose trading commodities. Sometimes you got to be more patient than you want. But nonetheless, it does have a payday. So that's where we are on that company. And the other one's doing well. I'm still bullish uranium, but I know the market knows more than I do. So when we get a nice gain like that, I always suggest that people follow up their gains with a stop loss, whether it's actually physically in their account or a mental one that they adhere to it. Because especially beginning investors often do a round trip. They buy a stock at 5, they watch it go to 25, and they watch it come all the way back down to 5. That's called a round trip. You never want to do that. You want to put your stop up there and you think it's going to 50 and it's only got to 25. But if you got let's say 10% trailing stop on it,
Hmm.
and maybe only half your position, you believe in this company so much, but take some profits. That's why we invest. And so people that, let's say, and we go through that in the Second Chance book and many other techniques, but keep it simple and sincere, and that's one of them. And so I'm advocating to our readers, hey, let's not get too greedy. We don't know the future. We got this rare earth kicker, but let's not get ahead of ourselves. Let's see what the market thinks.
Yeah, well, obviously ways to do things as opposed to your futures traders, which I remember my favorite quote is I think all futures accounts are terminal. You just try to make the patient as comfortable as possible. So hopefully people who get interested in commodities from the show are doing things the right way. How about one last macroeconomic question? So where do you say we are in terms of long-term debt and monetary cycle? I think we kind of touched on this, but I think it really would help to draw everything together.
Sure, this is a studied view, but it is an opinion. And I've been at this a long time. I mean, my mentors were in the hard money camp, and I started looking at them in my 20s. But I think, based on everything that we know for a fact, that we probably only have a few years left. And why do I say that? Well, look at the advent of the cryptocurrency world and look at what some of the top monetary authorities have talked about. And they've talked about moving to a digital currency, the digital euro, and we have a beta case. The Chinese have basically gone cash free to their phones only in a digital world that's based on whatever they earn and also their social credit rating. So that's sort of a very big chunk of the trade that's done for the largest population in the world. I mean, one out of every five people on the planet is Chinese. So I don't think we have a lot longer where we're going to see a new system of some type in some way, shape, or form. It may entail UBI, universal basic income. It may not. I think it will. But we're moving from the system we have now, which is mostly digital and electronic, into a new digital electronic system where you'll probably have less control of your finances. Things will be tokenized, so you don't have a direct peer-to-peer system where I could give you a $20 bill for taking care of my cat for the day. I will have to go through some tokenized system that actually tracks the transaction between you and I. And they say, wait a minute, you can't do that. George is allergic to cats. We're going to fine you. So I'm trying to be a bit funny and facetious at the same
Yes.
time, but I'm not favorable to the new system that's proposed. But I think I'm not going to say it's inevitable, but I certainly know that's the trajectory. So to sum it up, I'm a little bit hesitant about where we're going, but just because that's the direction doesn't mean we're going to eventually achieve it. There may be pushbacks. There may be a little more, let me say, privacy and what I would consider to be more of a free market approach to how money works and the individual's right to ownership, where we have the ownership theory of money rather than the tokenized theory of money. And we regain basically some of our purchasing power from our own free will rather than what's mandated as a carbon credit, a social credit score, or something along those lines.
Yeah, very frightening for those who've been studying social credit in China and what that's doing to their society. But I wish we could continue this interview. I think you've been very patient with us and generous with your time. But I would like to give our audience the opportunity to get to know you a little bit better through a lightning round. So, on the scale of like one to Superman, how do you feel about your lightning round skills?
I am a deep thinker, not a fast thinker, but I've been caught a few times on stage with a question from the audience. And the first one really was a tough one. And I sat there and I told them I was tap dancing, but I actually, by taking a deep breath, actually did have a good answer. So I will do my best. I think I've probably matured where I can do a fairly good job at it.
All right, I like it. I think I appreciate your modesty. So let's just jump into the ultimate seven. So, David, if you could be known for just one thing, what would that be?
An advocate for freedom, free market thinking.
What is one mistake that you've made in your entrepreneurial career that has taught you the most?
To hurry the process, to try to get rich quick, or to find that little junior company that's going to make me a lot of money, rather than go through the process of analyzing each company individually and having a mature approach to investing.
And what personal characteristic has been most pivotal to your success?
Perseverance, not giving up, knowing I'm right, and feeling very much that I'm right, and waiting for the market to come to me.
Okay, great. And now we have to be a little whimsical. All right, so here we go. Just tell me when to stop cutting the deck.
Stop.
All right, and what do we got here? What do you miss about childhood? We have to ask something different each time.
The lack of worry.
Yeah, I think that's true for all of us. Totally true. Well, what about a tip or trick that investors can implement in their business today?
I think one of the best things is what I teach about writing covered calls because it's a very interesting strategy. It doesn't take much time. And the average investor will make an increase of about 17% a year, which beats the heck out of a T-bill. And it's something that I've taught and learned years ago. So basically, I call it renting your stock. If you got 100 shares or more, a multiple of 100 on any company that's a big company, options aren't available on all of them,
Right.
but many. And you just say, okay, I think my stock is topping out. This would have been perfect in April when I called the top in gold, because most of those gold stocks follow gold, so they're going sideways. So you pick a
Mhm.
price near the top and you say, hey, now my stock at $100. The call is at 105. You have to pay me 105 for it. And you get the time premium and the stock stays at 100 or lower. You capture the premium. If it gets called out, I don't have a big problem with that, because if we're in a
Right.
bull market, you just replace your inventory because you're in the
Mhm.
warehousing business. So that's one that very few people really take advantage of, and I think it's a good one. Now, most option players lose money because they
Mhm.
buy the call. It's the people that sell the calls that make the most money.
Beautiful. Now, can you give us a book recommendation?
Oh boy, What Has Government Done to Our Money by Murray Rothbard.
Mm, interesting. Great author. And can you send us out with a quote to help forge our listeners as leaders and entrepreneurs?
When everyone's thinking the same, no one's thinking very much.
Beautiful. Well, thank you so much, David, for taking the time to share your knowledge and experience with our audience. Just want to make sure everyone can do what's the best way to reach out to David Morgan.
All right, George, it was great being with you. Thank you. And if you want to learn more information, just go to themorganreport.com/podcast. And we have some offers for you that I think you'll enjoy.
All right, beautiful. Thank you so much for taking the time to share your knowledge and experience with our audience, David. It's been beautiful.
Thank you.